This is Immy from iTradeAIMS.net, and today we're going to talk about this fantastic move on DAX. We had 4 trades, plus 20, plus 12, another plus 20, and then another plus 45 and plus 44. 2 trades were taken there. So let's discuss it. Okay, I can see the gang is here. Morning, what a beautiful morning.
Good morning.
You reckon?
See, the moment Alina said something like, looks like DAX is tired from all the actions, that very next moment, it printed this candle. And then it was this one. DAX is, it's volatile. It's, especially these days when it's gone all the way. Let me start.
I was just doing my bit to get it started, Immy.
Yes, you did, yeah. I certainly listened to you. It's like, oh, really? You think I'm tired? I'll show you.
Yep. And thankfully it did.
It did. For our benefit. That was fantastic. See, I saw this level here, and then it was struggling to clear it from here, and then I think it hit it again on the 9th of December, and then finally, obviously, the day before yesterday, it broke it, and it seems like it wasn't a temporary break. It literally is going to, you know, test those all-time highs. So I just got a call from the agency. 13,828. That's the high, isn't it? And I think it's going to test it before Christmas. Here we go. Almost touched it. Today the high is 13,774. So yeah, that's almost there. But there was a strong reaction there. Obviously, profit taking. Price goes up. But what's interesting is how it started, right? The way DAX started was like as if today, oh, it's 18th of December. Of course, people have gone for holidays, blah, blah, blah. But then comes to your mind, like, no, nobody's going to holidays. And no one is leaving their desk because literally, well, Xetra was always digital anyway. The German stock exchange is mostly all digital. People are doing it from the computers. But now with the COVID and everything, everyone, I suppose, is just sitting on their desks and, you know, trading it from there or whatever. Or probably mostly it's bots anyway. These are big companies, and big companies are usually bought by institutions. And the way they buy it is quite different to the way we buy it. Anyway, should we do a little recap of how it all went? I will have to change my screen. What do you say? I know you've all done it.
Yeah, let's do it. Yeah.
Yeah.
I'm on my TradingView platform now. So I really love this feature where I can just click on a spot. All the investment that I had done on my favorite software, Forex Tester 2, which I still use, Forex Tester 3, and I think they've come up with Forex Tester 5 now, and I have indicators for them. By the way, they have a sale going on, Forex Tester. This wasn't part of my plan, but it just came to my mind. But ever since I started using this, I find this a lot more useful. Emma is leaving us. Join us. But she might be doing her stuff. Talk to us. You know, there used to be this.
Immy,
Yeah.
if you're back testing, do you manually write down your entries and exits? Because this doesn't allow you to do it when you're
Absolutely. Yeah.
replaying your bars.
I usually do it on my when I'm doing the rough back testing, like what I'm doing right now these days for the 8 pairs. I want to go through the whole year. For example, if I'm looking for setup 1, setup 2, like the other day I shared about the euro dollar one, that usually takes me a few hours to finish the whole year, and I like to do it literally manually because I keep a ledger, right? I have this accounting ledger, which, you know, I used to use it for, it's like for my business. It's a big book, and I would take that out and it's got those lines there already, and I would go and scroll through the charts one by one and write them manually, you know. That's one way of doing it. But if you really want to like you want to train yourself as a simulation, which I and, you know, this other guy, Tommy, who has a weird name on Discord, something Evelyn or something, I don't know, I can't pronounce it. The guy from Finland, like we did it. It's so it's kind of a hobby doing that. So if you do it on Forex Tester, you actually take the trades. You can let it run automatically if you want, or you can do it click by click, candle by candle. It goes and then you take the trade. You can set target points. You can move stop loss and all that. This obviously doesn't do that, but at least it gives us, you know, you can go back in time. This is what it allows me to do. And what I like, my most important thing, I think years ago, when I first started trading, was I realized that when you look at books and when you look at forums and stuff, they show you the picture of the trade at the end of it. But what benefits us is the picture of the setup before the entry, because that's the pattern we need to memorize.
And that's the hardest bit to identify.
Yeah. So when the 3, 4, 5 is complete, looks a beautiful picture, but when you slash it in half and then you look at 3 and 4 only, it looks quite different. So for example, what we're looking at now is the London Open. But anyway, I want to quickly go to what we saw on the daily. So as we all know, and we should know, is that DAX is now above this range, which puts it into the extreme bullish zone. As long as it was here, it was still within sideways, still bullish, but kind of sideways, topping out kind of thing. But now it's kind of broken all the levels. The only level that's left is the all-time high here, and it's even above that. So it's only just a few points away from that, and that's where the pandemic started and everything went downhill. Little did we know, but giants like, you know, guys who are investors and value investors and stuff, they found this to be an opportunity. They bought a lot around this spot because, and I can say that with confidence, because if they didn't buy, price wouldn't go up, you know, and it literally indicates that they bought, and these 2 candles were actually giving away what was going underneath. So you have this 2 candle pin bar on the weekly. See, there's a long wick here on this week, and the next week price goes below the wick but creates its own wick, and the week after is a strong bullish candle followed by a doji. These 2 candles are a bullish waltz pattern. When it appears at the bottom of a wave, it's indicating reversal. So you have a doji here, indecision, price goes above it, and after that it never looks back, continues to go. Anyway, let's go back to the hourly chart. The way I saw the market today was very, very simple. We know that we have seen a very strong trend. It's a 3-day trend. Usually what you'll find is that in FX, after 3 days of wave 3, like these 3 days, you would see either price reversing down or a couple of sideways. But obviously this is kind of, this is DAX. It's not just 3 candles. It's basically all bullishness. It has broken all the levels to the left. So it did enjoy going sideways a little bit, which gave us these levels, right? So if I were to put my level, my first level would be here. Then this one. Then this one. And if it was to go down, then I have the day's low. And then the peak. I'm talking about this one. Then after that, I went to the M5 chart. And I already had a pretty clear idea that that's the level that I'm looking at. Right, this one. And I probably would go and create a line here. That's it. Go to the M1. You have your overnight range marked. You have your, okay, let me put a line here. This is Frankfurt Open. Not horizontal, I need a vertical one. Yeah, get rid of this one. So that's where Frankfurt opened. So it was going down, but because this was up, you could not have assumed that it's a downtrend. And obviously the hourly analysis helped as well. So if this is the low here of the session, I could have a line here as well, which I did, because I want to see what will happen when price reaches this level, but before that this level or this level. And it wasn't a bombastic move right at the open. So that's the last minute, and the first minute was this. So if I wanted to go long here, I had this level that was preventing me to go long. And then if this level wasn't there, I would be targeting that level. But we have these two levels to contend. So luckily I didn't go long. If I did, it would be fine. I mean, I would have taken a rent, that's it. And I would have probably gone short here as well. But for some reason, I knew I don't want to play it. So as you can see, hits those levels again. It shows that there's a lack of volume. Price is going back and forth between those levels. But if you know this method and you do these lines, you can save yourself a few rents, you know. And that's exactly what happened. So now it's coming back. And around this time, I'm thinking, all right, looks like Friday, end of the year, end of the month, Christmas is coming. Probably that's it. Because DAX does go kind of dead towards the end of the month on December. Usually, in normal years, even the whole of December used to be like very low, but not this year. Starts to go sideways, and obviously what you do is that when your gator is sleeping and purple is inside the box, price is tight, you don't want to do anything. What you want to do, actually I'm going to ask you a question. What do we do around here? So that everyone wakes up. Hello? Anyone?
Wait till it breaks above.
So what's the procedure? Like, what do we do? What's the prescribed formula when you see the market like this? Do we just stop trading and come back the following day and probably miss everything that happens? Or
Put alert.
right. That's exactly what we want to do. We want to set an alert for the range. So we'll set an alert here or an alert here. And certainly this is a clear level. So an alert here, either just to remind us if we are looking at other charts, if I'm going to leave this chart and look at something else, then if price penetrates this level or that level, I'll get alerted. And when that happens, I want to know how has it broken? Is it like, did it just kind of lazily come around here and then slowly broke the level and then created a very small candle and then started going down? Or did it just crash through it or fly through it? And that's what we want. Volatility breakout is what we want. Somebody commented around here that DAX is probably tired. And DAX immediately responded. So this test here was the third test. And as soon as this was printed, these two candles, we knew now something's definitely happening. Something is definitely happening. Now, if we had the real volume here, when you have a breakout like this and volume goes up, that literally is then, like if this was a stock and these two candles has relatively 2 or 3 times more volume than the candles before, then that gives you even more confidence. I was on it. I was watching the chart. Usually I would have left, but because it didn't take that long, because up to 15-20 minutes, I actually do not leave the screen. I just look at it, no matter what it does. And it was within that range, because low bot is for your 15 minutes. You want to take that trade. So in normal cases, it could happen many times to me that I would have paid a rent here, probably paid a rent here as well, and then backed off. And in that case, I probably walked away because I was upset or something like this. But on this, I had not taken a trade, and I was watching it, and I'm looking at it, and as soon as it started to break here, I took the trade, and before I knew it, it hit the target point. But this is not the trade that you ought to take, because this is just the beginning. This is what brings us to the chart, right? You guys all got alerted, and then we started waiting, right? I want to know what Doug was doing around this time.
I wasn't doing anything, just watching.
So were you on the screen, or did...
Yeah, I was on the screen. I just saw the 2 green candles. You said something about 20 points were available, and I was trying to work out where the 20 points were.
Yeah, from here to here. On the breakout, yeah.
Right, got you.
So obviously this would be risky, because if you were to take this, then you should have taken this as well. And it is quite possible that on many days you might find me take a trade here, and because there's quite sufficient distance between these two levels, like 9 points, I would obviously either have taken 5-point profit here or probably break even, if it depends on how it breaks. But the fact that these two candles were strongly bearish and then it hit those two levels, it immediately turned around. To me, it felt, it's turning, it's going. And because the overall trend is bullish, I was very happy to go in here, right here. And it went up. But it's quite possible that on certain days I will not take this. And if you didn't take it, that's fine as well. But then becomes the story here. That's what it is. I think this pattern is famous as... the bull flag. It's one of the most beautiful pattern. You have 3 trend candles followed by pause candles. Now here it was very beautiful. I wanted to go long up there. Around here I wanted to go long, but then I thought these levels are too close and I want to wait. So if I went long, it would still be fine. I had to then get out here. But then when I saw this is a cherry for me, a PC cherry. There's a little poke, but the candle is bullish. It looks red, but it's got a long tail with rejection here. This is a ABC pattern, and I can see that the actually, let's go to the settings. We want to show the box extension. It's a bit buggy on this. Normally it would be here, the level would be here. So this would create the Scooby pattern. The snout started from there. And it wasn't comfortable because I went long at 70. I think it shows 72 here, but on my feed it was 70. Right at the close of, well, right not at the close, but as this candle started going up, I was long around here. But it was 70 on our feed. I wanted to price to break this level straight away, but it didn't, which made me a bit uncomfortable. But then you have the green candle followed by a doji, and I thought, okay, we can still stay. So I broke my stop loss to break even, I think, after this candle. When it broke, that's it. I thought, all right, that's it. We're going. And I think some of you went long here, above this level.
Yeah, I did. Yeah. That candle I went long. Yeah.
Esther was long there.
Yeah.
Right.
Yeah.
That is, and here I would say now again, this typically, this is the Scooby pattern or the bull flag pattern, but this also is a setup too, without a dot. The concept of this is set up to why? Because this is where we count from. When your price is going sideways, alligator is sleeping, whether purple is tucked in or not. But if it's sideways box, and then there's a volatility breakout, followed by the sideways or the either sideways or a pullback, that creates the first box high outside the range. Well, not the first. Well, it is the first box, but this would be a second break, right? Does it make sense? Like, this is the range. This is the first break. And then it creates a box outside the range. So this would be a second break, which makes it a setup 2. But it's not a setup 2 technically using the flowchart because there's no dot. Because our flowchart starts with, is there a dot? Which means that we wanted price to actually come back to the green line at least, and then start to go back up, which happened later on twice, but not on this one. So this one we can call as a either bull flag or a Scooby pattern long. And when you have a Scooby pattern with a PC, then you have the Elliott wave on in your favor as well. It's like this is your impulse wave followed by a corrective ABC, and then it goes up. So I was already long here, and then I think I added on there, and this is where my commentary was going in text, I remember. I said, oh, there's your retest. And when the retest happens, you can easily put your stop loss then here. Even if you went long here, right? I want to today talk about this. So if you were long here and you saw this retest, you can easily put your stop loss a point or 2 points below this. Because then if it comes down, usually it would not continue to go up. And that's it. This would be your quick, but obviously you held on to your trade. For me, this would be quick exit out of it, and that's what I did. Because I want price to continue in this fashion. The reason I'm taking this trade over here is that I'm thinking these same buyers will kick in again, but they didn't. But because you were following a different trade management, which worked out for you, you held on to it for a while, and there's nothing wrong with it. And I think around here, you probably would have, if you had the levels, then this would be your target. If you identified the level, this would obviously would be your target. And because I had identified the level and price kind of didn't go there and started coming down, I was out anyway. What were your thoughts around here? You guys were just holding on, hoping to get a 2R? Or were you watching every candle?
No, I was watching that level, then bring it to break even, and then yeah, looking for 2R. Yeah.
See how it reacted to that level? Why these levels are important? Like when I was plotting these from the H1 chart, I did not know, I had not seen this chart that it's going to happen. It was in the future. And now price comes to it. Let's go to the hourly again. See this? So that's the high of yesterday as well. So obviously price reacted to it. And now this reaction created, you know, it brought action into the market. These three candles are different to these candles to the left. And I was thinking, all right, we could get another setup very soon, a pullback setup. And as soon as the green candle happened, all right, that's your blue dot. That's your blue dot now. Because you have a pullback, price goes inside the gator, and now it's out of the gator. We are back in the bullish territory, and I'm long here. This is a cherry as well. On my feed, it was a cherry and a dot because this low was lower than this. So it became a cherry. Was it this one or the other one? So it goes up, retests the level. Because there's enough distance between entry and the level, we could try it, and it's a bullish trend. Goes up, smashes through it, goes to the next level. And that's it. So if you make an entry here at 86, that's your probably 14, 15 points. It went further up as well. Yeah, there you go. Hits another level, reacts to it. Keeps going. Bang. So there was no reason to get out here because the market was reacting to the level, but still not really going down. And then it smashes through that level. And this is another level that it hit. Let's find out what it was. All of my lines have disappeared. So all of these previous levels. And so we thought, okay, now we have a divergence and a strong bearish candle. This is a fruit, pin bark, a PB fruit. Not much angle, which would, if I were to trade a fruit signal, I probably would take it because fruit is quarter risk anyway, and my stop loss would be somewhere there, which would be immediately stopped out. Or if my stop loss was up there, which is the correct way of doing it, I would probably have stayed in it for a while. But in the first place, I wouldn't take it because there's no, we need that parabolic kind of move. You know, for fruit, you want price to go something like this, away from the gator. And then over there you have this pin bar candle. Then you can look for the snapback. So let's go one by one. I thought it was going to go into a fourth wave. Honestly, I thought this is what it was going to do now, because we have seen one divergence and then another one, and gator is curling, and now it's going to go to and create that, and then it's even gone below the red line. And so I thought, okay, I'm not going to, and I think these are my exact words. I said, I don't want to do anything with DAX unless it breaks this level, or this level rather, unless it breaks the highs. Those are my words. Yeah. So I'm going to do that. So somebody's obviously not listening to my recap because they are trading.
Multitasking.
Yeah, well, you're not a woman, are you? We're supposed to be bad at multitasking. We are men. Anyway, so yeah, and I think some new people, when the beginner traders kind of get confused, that when you say at 9 o'clock, I'm not trading, this thing's really small, and then 6 minutes later, you say, I'm long, they kind of get confused. It's like, what was that? You change your mind. It's like, yes, I can change mine at least once a minute. Because every candle forces me to create a new thought. And that's what M1 chart is. Sometimes we create thoughts based on the overall, but in most cases, every minute sends information which would, force you to change your thought process. So that's our first setup one dot here. And then we had another one over here. Is it this candle? I think this is where the blue dot was. Let me have a look.
Not on mine, it wasn't, no.
11:01. Yeah, it was.
Mine was 11:03 on mine.
Oh yeah, either 11:01 or 11:03. Gator's open. AO is green. Market is going up. You have the highest high. Pure trend trading. You want to buy the highs and sell it higher. And that's it. It goes. Let's just do this. This one was very easy. Just took the trade. So this is what I did actually. I remember from the chat. Let me just read it. Let's go back. Let's bring it here. Yeah, 9:07. I say long in 13,722. 06 candle was OB. 27 add-on. 27 add-on. Oh, I'm referring to this level here. So I see an outside candle here. This is an outside, an OB. And I have the level. I put a pending order straight away. Goes in. I see the strength of the break. And I'm thinking, all right, nothing to the left. This is going to move. Then I get a seed forming. I add on based on it. If I didn't take this trade, I would definitely have taken the seed because this is the waltz pattern. We have the two trend candles followed by a seed, right? And if you just simply took only the seed, this was a mighty setup. Look at this. And see that target point there? I don't think it was a target. I don't remember. For me, it was no target or anything. It just moved so quickly. And this literally is a 1:5 for this one. A 1:5 trade within 1 minute. So if you risked 1,000, you made 5,000. If you risk 100, you made 500 on this little trade.
Look at it on F12. It was even tighter.
Yeah.
Two pips on S12.
Well, yeah. Well, you can't get anything less than 5 anyway, because you have to have those buffers. Yeah.
Not with the spread.
Not with the spread, and that's why I like if something has a commission instead of a spread, because I can have my, it really affects the trading. We'd rather pay commission than spread, because it allows you.
You only get one trading line on that platform, then presumably you don't have a bid and an ask.
Yeah. So, yeah, nobody would quote you that, but unless you go to the real, you buy the real contract, and that's probably 25 euros a point is that contract. And there you would pay a commission or something like this. Anyway, So this was, I think, the best trade for me. It was a plus 45 and plus 45 again. It was plus 50 or plus something like this. Let me bring that again, just for the video. Yeah, so I'm looking at my picture and in Discord, and my average entry was 13,725, which was right below the open of this candle. So my average was this, and my stop loss would have been here, and I got out at 65, just somewhere there at the end. 65. This is 2 points up, so probably 67 for this. Yeah. Wow. That's a 1:4. Yes, that's exactly what it was. My trade was 1:4. And because the trick that I do is that if I take this trade, right, 20, that's 2%. So if that's 2%, and then this is kind of 1%, and this is 2%, I'm sitting at 5%. Now I can risk half of that on a trade. So I went with 1% here and 1% here. I think it was more. Yes, 2%, yes, as a total. And it was 4 hour. So this got 8% trade just in these 3 minutes. 8% plus 5 ended up with a 13% day. Fantastic month. And all it took was 1 hour from here to here. I haven't even looked at the chart again. I will let Doug do the rest. Any questions up to this point?
Yeah. So if you got that little that S2 with that you just showed us with the arrow underneath the green candle, if you were taking that as an S2 entry, would you go to the high because the box high and then there's a high to the left of it? Would you there? Would you take your trade above that? Because it's
I took the trade above this.
Yeah.
Because the only thing that was going to bring me to this chart, the only way I was going to trade it to see was to see that the highs have been broken.
Yeah.
So my pending order, if you look at the chart that I've posted in Discord, you would see that my entry is a couple of points above this.
Right. Yeah.
My entry was 21, I think. No, not 21. 22. 13,722.
Yeah.
But my average entry was, because I added on, so because of that, it shows average as 24.9.
Right.
And my exit is 65.7. So,
Wow.
yeah.
What did you get percent on the whole trade? 12%, was it?
No, I got 8 on this.
Yeah.
And because I had 5 earlier,
12.
2
Yeah.
and a 1 and a 2 turned into that. And the reason I was able to risk on this twice again was because, the formula is that if you have your 2%, then obviously you're allowed to lose half of your winning. So you can take one more trade, 1%. If you win that one as well, and you go to 3%, then now you can actually risk 1.5%. So probably you can take half a risk trade and a 1 hour trade and still come out with 1.5 at the end of the day. And then if you won that as well, and you're sitting at 5%, then you have 2.5% to play with. And for that reason, I went with 1% here and 1% here. So that means if I lost on both of them, I would still have finished with 2.5%.
Yeah.
So that keeps the equity smooth. You want your equity to grow like this, right? If you don't follow a daily trade plan, then your equity is going to be like this. And that is crazy. We don't want that.
That's more like my equity curve.
We don't want that. We want the smoothness. But obviously that's not going to happen. So at least we wanted to do something like, this way, and then go back up, and then a little bit like down, a little bit up. And that we can only do like even the daily. If you do it every day on a daily basis, it just makes mathematical sense as well. If you were going to go this one step forward, you only want to come back. So you want to play waltz, right? You want to go 2 steps forward, but only 1 step back, not 2 steps back. Because if you come 2 steps back, then you'd rather have not traded the whole day. So you want to come 1 step back, and then hopefully you go 2 steps back, two step up tomorrow as well, and then probably a step down. So this is like 1 day. So if you like first trade, second trade, loss, second trade, third trade, won. So you're sitting at 3% now, but then you lost another one. That's fine. Now you can actually lose one more as well. Let's suppose you did lose another one. You're still sitting at 1%, but you have overdrawn yourself because you've gone more than halfway. So if you're 3 points up, you don't want to be less than 1.5, right? Whereas what I would do is that I become aggressive. So depending, 2 things you want to see. The market is good. It's still going in that same trend. And you've gone two steps up. You haven't come down 1 step at all. You've actually had a break even. And then you went 4. I went to 5. Let's say I'm 5 up. Now I have all the space available. I can do 2 or 2.5 trades and still be victorious for the day without breaking my rule of drawdowns, that you don't want to do more than 50% drawdown. So, and then when the position, opportunity appears, and it's very convincing because it's, it's the high of the whole year kind of thing from pandemic, and everything's bullish. You go 1% here, 1% here. Now you're risking to come back here, 2 points down, if you were to lose. But if you were to win, you're going all the way there. Probably higher than that. You went all the way there. So, yeah, that's we have to build on our profit, build on it. And we need to know when to stop. So if we started and immediately from the 0 point we went down a point, we can try one more time. Let's suppose we have a break even. We still can try one more time. And we went down -2. Now the next trade is going to be very difficult, because if I take one more, I am 3 points down. And then I cannot trade the rest of the day, even if the market is truly good. Because let's suppose I did that, and I'm 3 points down. Now, even if the market is really, really beautiful and presents the really clearest trade opportunity, I cannot trade because I just cannot go to -4 for the day. And that's how we need to think about this. And sometimes we would, suppose, start from, let's do it equidistance. So that's my 0, that's 1, that's 2, that's 3. I start from here, and I get a lucky 4. Suppose this was my first trade, and I went straight 4% up. Is that 4? That's 3 actually. let's call this 1, 2, 3, 4. Wow, I now have these 2 steps. I can now try it twice, find good setups, and still finish well, because I'll be two up, risking 1%. And if I'm 1 down, that's fine. Now, because I'm 4 up, I can be another 1 down, not a problem. But if I'm 2 down and I finish the day with 2%, that's it. I'll finish it. But we don't want to like go all the way down. You don't want to be up 2% or be up 4% and then finish the day -2. If you do that, you do not understand risk management and you're not going to last long. Anyway, anything else?
I mean, it's obviously not what you do, but could say for like yesterday where you had or even today where you had 12% and your daily target's 2%, you could sort of say I can carry forward 10% to my trading side of things, if that makes any sense.
Well, it depends on the market, isn't it? Like, if it didn't do this, right? And it created a bull flag like this, suppose, right? It would depend. So all of this depends on what the market is doing at the time, right? If you find yourself down in an up market, then you're doing something wrong, right? So if the market is like this today and you're down 2%, that means something's wrong with you. You are doing something wrong. So in that case, your stop loss for the day should trigger and stop you from trading because you are detrimental to your own, health of your account. Anyway, but if you're successful, if the market is going up and your equity is going up as well, then you need to build on that. For example, if this chart, this parabolic move, and this is usually, when market kind of does this towards the end after divergences, this usually indicates that there's this last gasp before drowning. So this usually indicates exhaustion. This is exhaustion kind of pattern. But if this wasn't that and it just went sideways, and suppose it did something like this, oh yes, then we would have another opportunity. I would highly be interested because now I'm sitting at 12%. I can go with even a 1% and then add on another one and add on another one just quickly and maybe turn that. And that's how the other day, when we had the 43% craziness, the market was moving, dropping like crazy, and building on the profit just kept going on and on and on. And I had consecutive 29 winning trades on the 15-second chart, a 12-second chart. Yeah. Hello, Sam. Are you there?
Yes. How are you?
How are you? Finally, you are free for a
It's been a
change.
crazy week. Sorry, couldn't make it the other day.
I hate you, but I still love you, so that's it. It's one of those things.
How are you going?
I'm very well. Thank you.
That's good.
Yeah.
How is everyone?
I can.
Thanks.
Riding horses, huh?
Yeah, definitely.
Yeah. I know why she's laughing, because, I thought she was sending a signal. I thought it was a code. She has a date with her husband again, calling him a horse. Turns out it was a real horse.
Yeah. My husband is not at home during the day, so
Oh.
it's impossible to use him as a horse during the day. He would be happy for sure, but when he's not present, there is nothing to do.
Oh, well.
Yeah.
Right. Shall I run the gap, not gap, shall I run the scanner?
Yep.
Let's
go for it.
Yeah, let's have a look at. Oh my goodness, 53. So I think the members who are here, they're probably aware, but I'll just go through here again. Is that I have a watch list, two watch lists. One is between $1.5 to $20, and the other one is $20 to $100 stocks. And using the criteria of the setup one, I have designed the scanner. The scanner looks for wave 3 and 4 situation. So when I run the scanner on the daily chart, of course, it would find stocks that have a wave 3 and a 4. And then I have to use my brain to look at the pattern. So this is not that beautiful pattern that we're looking at, right? What do you think?
No, absolutely not.
We don't want it. We want something that has a clear wave 3 and then a sideways wave 4. So we look at the next one. This is okay.
It's missing data.
Yeah, there are some
Immy?
gaps and stuff in there. Yes?
Are you looking at US stocks because they move better?
Yes.
Most of the time?
Yeah, we can look at any other stocks as well. I do look at London Stock Exchange as well, and I have some trades in those. But yes, it's mostly the US stocks. And the reason US stocks, is that I want to look for stocks that are $2 to $10, $15, so that any small fluctuation can double and triple your trade. So almost every second, third trade on these smaller priced ones will bring you 70, 50, 60% growth on that particular trade, because there's opportunity. And now, we have some examples, like for example this one, or this one, or hold on, there's another nice one. So look at this one, right? Beautiful setup, wave 3. It hit my scanner somewhere in September, waited for it all this time. September went, October went, around here it breaks out. So, when I have these, I would set alerts. If I have a level like this, then I don't need an alert. I would just set a stop order. Kicks in, add in there. So first entry was taken 152, second one 167, sold it here at 211. So your price was, say, 150 average, and you sold it at 210. So percentage wise it's huge, right? If you look at it,
Yep.
If you go from here to here, on one single trade, you've done 43%. So investing 10,000 and 4 weeks later collecting 4,000 profit, it's not possible on bigger stocks. If a stock is valued $100, you would need quite a lot of money to buy that. And for it to go from, to do a 50%, if a stock is worth 10 billion, you're asking the public to put 5 billion worth of value into that stock for it to go 50%. Whereas this stock, the market capital was 2.5, which means that a few days ago, they were probably at 1.5. So $1 billion came into this company, right? But not, 50 billion. And this is one of the heaviest price stock. It's still 2 billion. We will deal with the stocks that are really smaller than this. So this is like small cap stocks, small cap. And so ideally, I would like to focus on small caps instead of large cap. Large cap is anything above 10 billion. This is small cap. This is small cap. So I can, this is look at this one. 62 million. Very small company.
Do you look at their sectors or anything like that at all, or do you just jump in based on the chart.
Currently not looking at sectors. Currently simply looking at volatility and momentum and setup one. Mostly,
Yeah.
yeah. Because all the sectors are going up. Aren't they?
So volatility and momentum, what are you looking at?
Oh, I'm looking at setup ones. And setup one literally
Right, yeah.
is the momentum of weekly chart. So every time you have a setup one,
Yeah.
you'll have an open gator with 3 or 4 pullbacks. So like
Yeah.
the best example was this one. Even though on the weekly it's overall going down, it doesn't really matter to me. What I want is this pattern, you know, breakout and then wave 4. And I do look at the charts like this. Whenever I do the search, I do it like this. So I look at the charts like so, because I want to see what's going on the weekly chart, you know. Sometimes it's iffy because the overall it was down, but then I look at this, and if I'm not sure, I can go to this, or I'll go to Market Watch, you know, that website, and I would you know, look for some positive news for that company. So you look for some news around those times, and you find out something's happening. Like this is a good news. I think there was a few more things. So there's a few hints that you get, but that's not important. Fundamental is not important. Technical is important. This catalyst type of thing is important for if you're day trading. For this setup, the setup itself shows you everything. Like, for example, this strong wave 3, right? And then followed by the sideways, this ABC, just really clearly. So we're looking for setup ones. And I mean, it pleases me so much looking at this, that the setup one just does so well, especially in, you know, I mean, we are still in the bullish market. It has been a bullish market for past 10 years. And if you go back and look at charts, you would cry because there were so many setups. This setup one, if you understand what setup one is, wave 3, wave 4, bang into wave 5. That's it. Anyway, let's quickly go through some of the charts, and I might add some. I will add this one. Alt W is the shortcut, so I'll do quickly. I'll probably add this one, but we'll see. Oh yes, now see, this is the type of stocks that hits my scanner. See, today this stock, CFFN, I don't know what the hell is it. Some financial company, whatever it is, price is correct because I already know that my scanner would only give me between 1 to 20, so I don't have to look at that. I already know that. This is slightly expensive, but still good. Market capitalization is small cap because it's in billions, not less than $1 billion. And this could be a setup one. Weekly chart, not really the most beautiful, but this is the this is basically the hypothesis time. So I'm just adding it from the initial scanner. So I've scanned it and I'm adding it to the watch list. Whether I will trade it or not trade it will depend on what happens after this. So like, I want to be very quick with this. So that's step. Well, this is already gone, but we'll add it anyway. Yeah, did you want to say something?
No, I said yep.
If you want, I can actually download and send you the list of these stocks as well once I'm done. You know, you can just, Sam, for you or anyone else, if you want to create the watch list, I can download the watch list CSV, like here. See, I can, export it, and then you can import the same, and you will create the same watch list. If anyone's interested, let me know. This is also like a very good feature. And, you know, appies and stuff. Oh, look at that. This thing has gone up. So this is already on the list. I've actually bought it here because this is paper trading on this, so I didn't really care about this. It's actually gone up and came all the way down. And I've never looked at it. But look at this. This has gone from 225 to 419.
Pump and dump.
Yeah. But obviously, if it was on my real account, I would have exited here. Really easy trailing candles. So what would be my profit on this? Okay, what's the entry? Entry is 226. Let's bring this at 226. Stop loss obviously over here. And if I trailed it, 1:6. 1:6. Yeah, beautiful. Okay, let's go through. Oh, quite a few stocks coming in. Oh, look at that. Oh, this is beautiful. Look at the weekly chart.
Yeah. This is ripening, yeah.
Yeah. So once I'm done with doing the scanner, then we will go through the watch list. And we will remove the charts that either we have exited with profit or the ones that are no more setups. Oh, I'll probably add this, but weekly is not good. No good. This one,
That's interesting.
yeah, I took this yesterday, but ideally I should have taken it the day before. I don't do pending orders for these things. Like I wanted to just close here, and then you can just go long, either at the end of this day or the start of next day.
Yeah.
MoneyGram. So it's not like, it's a pretty good stock. It's MoneyGram,
Yeah.
535 million, small cap. Yeah, definitely. And then we can look at this news and stuff. So when a company is reputable, it's very easy to invest in it, right?
Yeah, now the beauty of scanner I notice is it goes through each sector and it picks up really some good companies. I actually once found LG stock in there as well.
Yeah.
So usually, like even if you go by set of one, and then this on the second stage you can focus on filter and doing some research.
Oh
about the
yes, yeah.
company.
I think there's another scanner that I've got. I'm working on another one, which like if a scanner picks a stock here on the first breakout, you can be actually prepared for it and take these pullbacks and stuff with it as well. Oh, this is CBAT. It's hitting the scanner again, but originally it hit my scanner here. And what I've noticed is that it's very important to actually run your scanner daily, Sam, because look at this. If it was here, if you ran your scanner here, it wouldn't pick it. On this day, it wouldn't pick it. So you had 1, 2, 3, 4 days to add this to your rates, because this is where AO was below the zero line. Once the AO is above the zero line, it's not going to pick it. So it's really important to run it daily. Yeah, you're right. Because it only takes like a few minutes anyway.
Yeah.
Oh, this was one of the beautiful trade. This is my real trade. Not the same amount of stocks, obviously. But I did exactly same fashion. So 317, 347, 376. And then it smashes and goes. And then we got out at 925. Just imagine that. 320, you buy a stock and sell it for 9. Damn. Right? 300%.
Yeah.
You invest 10,000, you come out with 30,000.
In what, 5 days or something?
Yeah.
6 days?
6 days.
Wow.
Yeah, and if you have target set, it's mainly set and forget, right? While you sleep.
Oh,
Here in
yeah.
Australia, especially.
Here in Australia.
Like
especially.
you don't get to see.
This took 12 days, by the way. 12 total days. No work. Gaps up. You look at it. You're like, oh, all right, nice. Next day, gaps up again. Wow. Goes all the way up. You don't do anything. The day after, I thought, okay, now it's going to be dump. This is dump time. Get out. And this is without using level 2 or volume or anything. This is really purely AIMS stress-free trading methodology. You're not looking at fundamentals. I mean, if you can look at fundamentals, it would definitely help you. For example, looking at some catalyst news and stuff like that. But really, I don't find any need for that, because if you see a 3, these moves will not happen unless either some news helped it create this, or this created news. So this move would have created news, and that would have brought more. And this is what I believe in. Like, this first move is what the psyche of the market. And the reason setup 1 works on stocks and individual smaller stocks even more is that the setup 1 is based on the Elliott wave psychology bit, right? Elliott wave is not really like a pattern. It's more to do with the human psyche, right, of the traders. And I've noticed that the smaller the stock is, there's an important thing called float. See here, shares float. So the float is the number of shares available in the market to be traded. So that a company could have 100 million, let's say 100 million stock, but it wouldn't. Not every stock will be available for sale. It won't be in float. So this is the float. So that's the supply. And if the demand rises, if the demand is high and the supply is limited, there will be more price fluctuation. And that is what we want to benefit from. Whereas if you go to a big cap, they have billions of share float. So the supply is unlimited there. And so a simple institution or a small organization cannot really affect that price that much. And the fact that companies like Tesla are moving so crazy, even with that high level of float and capitalization, means that this really is a really hyped market, and the market is really interesting. That means like not just individual investors, but really huge big companies are investing in that company, making it one of the biggest companies in the world. Okay. CBAT was one of the greatest examples. Oh, look at that. This was on my list for quite a while. I'm calling it baby, but it's actually Bed Bath and Beyond. So this company, see, our scanner doesn't pick this, Sam. These situations, the scanner doesn't pick for now. So I'm coming up with a way that it starts to pick these crosses. So, when the green goes below the red, but still below both of the, still not touching the blue. So that means the AO is close to 0 line. So this could have been a very good trade, over here. And guys, if you look at this pattern here, does it remind you of today's DAX?
Yeah. I'm actually live on this. I have CLDX running on my live account.
Remember that. You actually shared it. Yeah, this was a signal.
There was a setup one long time ago, remember?
Yeah, here.
Yeah, a while back, from there.
You're still on it?
Yeah.
I remember we were still in Slack at that time. The CLDX.
Yes.
Yeah. Damn, you hold on to things, man.
I'm holding.
You need to marry. Because you hold on to things.
Married to what? Stock? No, market.
Marry something. Man, woman, half a man. Do something. Because you'll hang on to them. They'll be like, yeah, man, this guy is really good. Okay, so that's 53 stocks done. And now let's maintain the watch list. So we have quite a lot of shares. Yeah, it hurts me.
Beauty.
Missed this one. Look at this. Shall we go and plot the target zone 1 on this? So if people are interested in target zone 1...
Just really quick question.
Yeah.
Would you set the 2R on a stock like this? Because they under $20, you don't know whether that's going to be pump and dump. So is it safe bet to set 2R target and just not to worry about it in case if you get spiked like this?
I can guarantee you that trading the setup one with a 2-hour target, you will maintain 1.5 profit factor for the rest of your life if you go with 2-hour.
Okay.
You can just do that. But if you want to enjoy the fun, like for example, you said that you are still in CLDX because you're enjoying it, you are letting it run, and you still are looking at the weekly chart. So let me go back to CLDX. Right, so you went long here, it went all the way there. Let's suppose if we had the target zone one on this, we will start from here and there and here. Well, it will be hit here, right?
Yeah.
So one way is to go in and just forget about it. It either hits target zone 1, or if it goes to half, you'll move your stop loss to break even. You know, the usual technique that we have. We shouldn't change that. We shouldn't change like, oh, because we're trading stocks, so we should now not apply the formula. No, that's the main point. We will apply the formula. But if you're letting it run, obviously it's not on the daily chart then. You're actually letting it run based on this information now. You know, you kind of got in here and it's still going up.
Yeah.
So, yeah, 2-hour target, really good. But let's suppose, I mean, the idea of setup 1 is this. You have identified the wave 3, and now you have identified wave 4. Now, you know that the most important thing about wave 4 is you want to find out what is the bottom of this wave 4, you know, the end of it. And this, because this is one low, and then it's retested again, this definitely is your low. So if you were to go long on this, now you have two options. You have one option here, because this is the tighter box, but you know that you will definitely be proven wrong only if it goes below wave 4. So if you were to do your analysis of 1 hour and 2 hour based on the bottom of wave 4, then target zone 1 would sometimes give you 2 hour, sometimes a little bit less, sometimes a little bit more. Sometimes 2 hour would be 3 hour, target zone 1 would be 3 hour, sometimes would be something like this. So this comes out to be a 2 hour target. I think if I took this trade and it automatically got exited there, I will have no regrets. No regrets at all, because this will happen over and over and over again. You know that.
Yeah.
So that's another one. Still going. Stop loss has been moved up there. This one we missed. I could probably delete it, but I'll keep it for a while. This one I've gone long here and I've exited. I can still keep it. It's not really a healthy chart anymore. What do you think? Would you keep this on your list?
Not really. I mean, this is the
ugly.
beauty of stock, right? You get plenty of, you can be choosy because you get a lot of choices, right?
Yeah. So I'll delete this from my watch list. Oh, look at this. I missed so many. So AP, I found this after the earnings. And because I saw the earning on it, and then I looked at the stuff as well a little bit.
I notice usually the setup one around earnings are very powerful.
Yeah. So before earning, because people would not invest in them because earning report haven't arrived yet, so the market kind of slows down, right? And then the earning report comes out, and then you have the explosion.
Yeah, and sometimes it moves before earning because of the rumors.
Because of the rumors, yeah. So let's see what happens over there.
So if you see like earning coming, and if you have set up one there, I would take it.
Right. Oh, this was a pretty good setup one. Like, look at that.
Yeah.
If you take it here, and the way I would always take setup one, for me, it will always be at least 2 positions. So if I ever take this, I don't want to go full 1% here. I would go half my position here, and then it starts to come back up. And if anyone's listening, this also is a setup 2, by the way. This here, because this is the second box. So the first break, second break, makes it a setup 2. But obviously, it's a sleeping gate and stuff. We can still call it setup 1 as well. So there's little distinction. These two things are really close to each other. So this is the first entry, and that's the second entry here. But correspondingly, like that's
Sorry.
so that's oh, you're still keeping that classic tone, huh? Look at that pullback. It's so beautiful pullback. Anyway, let's go to the next. So this is, oh, the stream's gone past 1 hour. Okay, so we have a strong move on this, but then wave 4 is really rubbish, but we'll keep it. And this one most probably needs to be now exited here, but we can still keep it. Maybe it still goes up. The wave 4, I think entry should have been here and here, but our entry is late. Whatever you see on this TradingView, just these trades are only for the test basis, but not all of them are like that. Some of them are actually on my real account. I'm moving stuff to TradeStation now, by the way. Interactive brokers.
Oh, okay.
Yeah, interactive brokers are really rubbish.
Yeah, I didn't like their platform.
Platform is like 1980s, man.
Yeah, the only thing I like is the the instrument they offer. You can find pretty much everything.
Everything, yeah.
But TradeStation, yeah, it's pretty good, and you can actually, it has integration with TradingView,
Yes.
so you can directly trading from TradingView.
I've actually tested it already. I've tested it.
Have you?
Yeah, it works. See,
Okay, I might do that, but I need to switch the whole portfolio to them.
I had this connected already. It connects to
Is it live?
TradeStation.
Is that your 1 million live?
Nah.
Real money?
I don't know. Jasmine was talking about it yesterday. She mentioned some Singaporean guy, but she was actually mentioning me. Anyway, so this is the long here on this one. Oh, look at this! This is such a beautiful setup one. We've actually got out of this already. Western Asset High, whatever it is, investment company. It's a beautiful setup. Look at this. See, it's really strongly down, but this moved really similar to a US index. They must be investing in something like that. But anyway, so this was a beautiful setup. This was beautiful. We can get rid of this now from the. Okay, I got out of this one. This was a beautiful setup. Liquidity. I remember telling you about this, but either you didn't take it or you were fully invested or something. This is beautiful. 9.19 and got exit at 15.48. This was my real trade. This made some money. It was a really good trade.
Yeah. It's nice.
NAD. So this one should have been exited yesterday, or actually it has been. So profit has been taken. 2/3 has been taken. And so the position was built over here and here. So we can be like quite relaxed on stocks because it's dailies. So you can still, the original entry should have been here. Well, we took our entry here and then kind of got a better position on the pullback. Another add-on could have been here. This would be a setup too, by the way. This is a Hunt Cherry. So the opportunities are endless. Let me just quickly go through. So this is how I trailed those boxes with buy stops. But now it's gone too far down and it's mingled. So it will make sense to actually cancel the order. If it starts to come out again and then creates a box over here, then we'll probably get interested in this again. So we will keep it on the list. This was another. Just look at all these setup ones, man.
Yeah.
Look at this setup. It's beautiful. Another taken here, exited here. And that's how we do it. But, see, this is that thing, the question that you asked. If you were
2 hour.
Yeah, if you were to go with 2 hour, oh, not that. Let's delete that bit. Okay, so this would be my 1, 2.
You got gaming keyboard. You got mechanical keyboard.
Yes, Cherry MX Red.
I could hear, man.
Yeah, and that's the sound. I want to hear this. And it's got all the RGB lights and all that stuff. Corsair. Like the tiniest touch. You just touch it like this and it registers it.
Yeah.
So that's your 1, 2, 3, 4, 5, the 10-second Elliott wave. And so that's your 3. That's your bottom of 4. Oh, look at that. So, oh yeah, I think you probably had your target point either here, or probably round number it to 650. Or if I use my target zone, and this is most probably what I would do, because I like my target zone to be printed from the start of wave 3. You know, I don't like it here, because ones, you can never really be sure where is wave 1. But you can really be sure about where is the start of wave 3. So it was definitely here. So if I use that concept, and so if you go long above this and your stop loss is below where you think is the bottom of wave 4, and that was your target zone 1, that's 2.4. Man, come on. Like, why not? Why would the more perfect your setup is, the more perfect your target zone 1 is going to be. And this is the beauty of it. So if your wave 4 is sideways and it is between 38 to 50% pullback, your target zone 1 is going to be very accurate. If it's more than 50% pullback, your target zone 1 is going to be inaccurate in most cases. And if the pullback is less than 38%, then your target zone 1 in most cases will be too far. So you'll just simply go with 2R instead of the target zone 1. So that's the end of this. Oh, this is another one that I missed. So this is 3. In December, I haven't really taken any trades. Look at this beautiful setup one. So again, if you did not run your scanner in these days,
you missed out.
You would have missed it. But I need to look at it again. It's beautiful. Look at it. See that pullback here? Let me take it back. Yeah. So you see, this is the pattern, Elena, we were talking about, that you need to learn. We need to learn to identify this pattern. Because before the pattern completes, this doesn't look like the setup 1 pattern, does it? So we need to keep an eye on the algorithm, which is peak of 3, cross of 0 line. That's what it is. Peak of 3, cross of 0 line. And then after that, we would manually look. We would wait for it to create that tight box, which in this case, it soon did. And that's it. And we need to remind ourselves that this box might look big at that point, but once it goes and the pattern is complete, the box is going to be squeezed. So let's do a quick post-trade kind of, quick.
What do you?
Yeah. 1.
What do you need to look for to avoid B traps?
Yeah, it's a famous question. The B trap, for example, here.
Because like this one, yeah, that's right. That's what I'm looking at.
If you restrict yourself to the cross of 0 line, you would never get B trapped. Simple as that.
Because that'll come afterwards.
Yes.
Okay. Yep.
But that also means that if sometimes, price, if it doesn't stop. Like, for example, if you were interested in this, but you were scared of a B trap here, you missed it.
Yep.
Right?
Yep.
So that would be the cost of it. So that's a quick 1, 2, 3, 4, 5. And I think based on this, target zone 1 would be...
Would there be other things like, would a B trap ever come after just the first peak on the AO, or would you need to have had some divergence?
Your B trap would appear right at the peak of wave 3. As it starts to form that ABC down, And okay, so let
Yeah.
me just go into this a bit further.
I'm just looking like on this example.
Yeah.
Like you've had a divergence on the AO
Yes.
before that turned up. Is that something that's consistent that you could look for as well? Or
No,
not?
actually, when you get the divergence, then it's very easy to avoid a B trap because you've already
Yep.
seen that momentum is going down. But when you get B trapped over here, you know, this is the pattern that normally on DAX M1 we would usually go long here because we want to
Yep.
trade that. And the reason we do it because on M1 we are playing with volatility and momentum. Whereas this is
Yep.
a daily chart and we don't know how it really moves and stuff. But DAX, we understand it because we trade every day. We know that if there's a certain way it moves, we know that it's, you know, it's in momentum. So we want to take advantage of this. But even on DAX, when it came here and it started going down, then this would become a B trap. And then you would know, okay, so now it's going into wave 4. And you would pay a rent on that. But when you have a divergence already, you've already been warned. You'll be like, okay, because divergence indicates that most probably we're going to do a wave 4 now. Because you have internally 1, 2, 3,
Getting
4, 5. Yeah.
To the end.
Yeah.
Yep. Yep. Okay.
But definitely the thought of how do I avoid B trap is incorrect thought process because B trap itself is an entry signal as well. Because this is your Scooby, right? That's your ears, that's the snout. It goes through the snout.
Yep.
If it successfully goes through, it becomes a wave 5 of that 3, 4, 5, right, with the divergence. If it doesn't, then you find out, oh, what I thought was a new wave actually was a B wave. Because the reason it's called a B trap is because this is wave A, B, and C. And that's why it's called B trap. And I do call it B trap because within the B, you have A, B, C, and the C wave has this character of spikes. C's create fake outs on a certain different time frames. So because this is internally ABC, this is a fake out. And this would be, this ABC down usually would create a PC on a higher time frame. So if there was a box here somewhere, this could have easily created a PC because this would be like a poking out spike and then it goes up. So ABC pattern is an opportunity rather than a threat. Right, so I think this was a long session. I'm going to complete my watch list on my own. The rest of it has been an hour and a half. And it's a Friday. Most probably some of you might not even trade after this until the next year. So if that's the case, then happy holidays to all of you. Happy Hanukkah, happy Christmas, happy holiday. And I will be here. And this year, I think I will probably be back after Christmas as well for the few days. We'll be talking, chatting, probably taking trades. And then we will take the New Year break again. So, you know, I'm here. I'm not going anywhere. So let's have some fun.
I'm away for a few days next week. So
Yeah, have a nice one.
check in when I'm back and see if you're around.
Yeah, enjoy your holidays. Enjoy your time.
Happy trading.
Happy trading, everyone. Bye now.
Thank you, Immy. Bye.
Bye-bye. Time to ride
Thank
your
you, guys.
horses.
Yeah.
Yeah.
Good night, guys.
Bye-bye.
Thank you.